All right, today we're going to dig into the timeless wisdom of a true legend of the markets, Livermore. But listen, this isn't about some secret formula for picking winning stocks. No, this is about something much more important. It's about mastering the one single variable that truly decides if you win or lose. And that's the person looking back at you in the mirror. And look, Livermore didn't mince words about this. He was crystal clear. You think you're losing money because the market turned against you? Wrong. You're losing money because you lost control of yourself. The market is just there. It's your reaction to what the market does that's going to make you or break you. So that's the real question, isn't it? The market is just the arena where the fight takes place. The real battle, that happens inside your own head. And that's exactly what we're going to unpack here. Livermore's playbook for winning that internal war. Livermore figured out that what really destroys a trader's capital isn't some complex algorithm or a big geopolitical event. Nope, it's much simpler. It all comes down to two basic human emotions: greed and fear. That's it. And if you let those two run the show, well, they are guaranteed to lead you to ruin. Let's break down what this actually looks like in the real world. Greed. That's when you throw way too much money at a hunch because you're convinced you can't lose. It's when you chase some anonymous tip you saw online. Fear? Well, that's what makes you panic sell during a totally normal market dip. Or even worse, it's what makes you cut a winning trade way too early. Both of them act like funhouse mirrors. They totally distort reality and force you to make just awful, catastrophic mistakes. So how in the world do you fight back against your own emotions? Well, Livermore's solution starts with one thing: defense. Before you even think about making money, you have to become obsessed with not losing it. Your capital is everything. It's your lifeblood. It's the ammo you need to stay in the fight. Once it's gone, you're out. Game over. And this is so important. I mean, really let this sink in. Success isn't about one spectacular win. It's about your ability to survive the inevitable losses. Staying in the game is the real goal. You have to be around long enough to be there for those truly big, life-changing market moves. That's the only way you can really win big. And you can see the difference in mindset here, right? The professional, they cut a loss immediately. It's not a personal failure, they just call it market tuition. It's the price you pay for information. But the amateur, they're driven by hope and ego. They hold on, praying for a comeback. Or they do the worst thing possible. They average down, throwing good money after bad just to defend the fact that they made a mistake. This is one of Livermore's most critical insights. Taking that small, planned loss the second the market proves you wrong, yeah, it stings the ego a bit, but that little sting is what prevents a catastrophic, account-destroying loss later on. You're basically paying a small price to avoid a total financial disaster. Okay, so we've got our defense down. Now, how do we transition to offense? Well, once you've mastered survival, the next great discipline is simply patience. Livermore insisted that the big money isn't made in a flurry of activity and constant trading. It's made in the disciplined, sometimes agonizing process of waiting. Now, here's a core truth that most people just completely ignore. The vast majority of the time, the market is just making noise. It's just chaotic, directionless movement designed to do one thing: lure in impatient traders, churn their accounts, and transfer their money to the people who know how to wait. So what does that actually mean? It means your most profitable move most of the time is to do absolutely nothing. The ability to sit perfectly still, in cash, and just watch is probably the greatest weapon a speculator has. Impatience is a tax you pay directly to the market. Waiting for the perfect setup is the only way you're ever going to get the odds in your favor. Okay, so how do you know when to finally act? Livermore waited for something he called a pivotal point. And this is not a gut feeling or a guess. It's a mechanical trigger. It's a specific price level that, once it's broken with real force and conviction, is basically the market sending up a flare, confirming it's ready for a major move. This turns trading from an act of hope into an act of confirmation. And the rules for trading this signal were totally non-negotiable. You do not buy before the breakout just hoping it's going to happen. No, you wait for the market to smash through that level and prove its intention to you. You're trading what is happening right now, not what you think might happen. It's a huge difference. Okay, so the signal is confirmed. The light is green. Now, how do you go on offense and build a really massive position without taking on a crazy amount of risk? Well, you can probably guess. Livermore had a precise mechanical method for that too. This right here is the absolute law of building a big position. You never, ever, ever add more money to a trade that is losing. You only add to a position that is actively working and proving you right by moving in your favor. You reinforce success. You never, ever reinforce failure. He called this pyramiding. You start with a small pilot position just to test the waters. Then, if and only if that first trade shows a quick and healthy profit, you add more. Your biggest commitment of capital only comes way later, once the trend is obvious and your earlier buys have built up a nice cushion of profit. In other words, the market itself pays for you to take on more size. And that initial test position, it's tiny. Livermore suggested it should be no more than 20% of the total amount of shares you eventually want to own. It's a really low-cost way to just ask the market, hey, are you serious about this move? And if the answer is no, the loss you take is completely insignificant. All right, so we've covered defense, we've covered patience, and we've covered offense. But all of these rules, all these tactics, they are completely useless without the final ingredient, the internal discipline to actually follow them. And this brings the whole lesson right back to where we started. See, this requires a profound sense of humility. You have to accept that the tape, the objective price action on the screen, is the ultimate authority. Your ego, your biases, your brilliant analysis, absolutely none of it matters if the market disagrees with you. You have to learn to trust the evidence of the market over the noise inside your own head. Adopting this mindset is the final key. You have to treat speculation like a business of probabilities, and you have to accept that your ego is your most expensive liability. You have to detach from the outcome of any single trade. Trust what the market is doing, not what people are saying, because ultimately, discipline is the only bridge that gets you from where the crowd is to where the winners are. And that's really the ultimate challenge that Livermore leaves us with. The market has clear patterns and rules, mostly because they're based on human nature, which never really changes. So the hard part isn't figuring out the market's rules. The hard part is developing the self-mastery to follow your own.